Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Tuesday, May 7, 2024. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? Plenty of stuff on the docket. Let's go through it piece by piece because we got a lot of different things going on. I want to take a look at a multitude of different charts to get a sense of where we are and what the big picture story is. Another rather quiet day, and this one was a narrow-ranging quiet day. And guess what? The first thing out of the chute we want to note today, this is a sticky note piece of material, is we're getting into an on-time type of situation. Call it tomorrow / the following day. So Wednesday, Thursday, on-time type of situation. They're above the trend line. That's a bullish development. Above all the moving averages, a bullish development. And here's something we talked about first thing in the morning today in the live room. We reiterated this breakdown candle high off the weekly chart 5/15/30. What I said this morning, which I also said last night, is intra-week, they could spend some time above that high. What's the likelihood that they close above it this week? Sure, it can happen, but the large majority of time, it won't happen. And by the way, the larger majority of time, they're at least going to come back and run a test at that area at some point during the week now that they're above. That makes a little more sense when you go a little bit farther down the line and you understand where today's resistance is or was. We'll get there in a few moments. Keep your panties on. Just reiterating one more time so we get a look. This is the breakdown candle high on the weekly chart. That's the important spot. They shouldn't be able to, under normal garden variety market conditions, be able to waltz right on through, or as they say in the trading parlance, whistle past the graveyard right above that number. Shouldn't just keep on going without at least running a test or two or so. Monthly chart, high on the chart, one down month last month. They're eating time off the clock right around the trend line. The market's in a firm uptrend. The 20-period moving average and others are way below current price. Eventually, price of the 20-period monthly chart moving average will have a meeting once again with price at some point in the future. The 20-period moving average will move up over time as long as price stays above, and eventually price will come down, the moving average will come up, and they will meet yet again. Where is the likely place? Well, the likely place, we don't know this for a fact, but you see this high over here from 2022. That's a breakout area. Eventually, Mrs. Market is going to come back to run a test of said breakout area. We can't say when. We don't know how she'll get there, but we do know she will be there at some point. We don't look at this one too often. Here's a quarterly chart of the SPY. After a pullback from the pandemic era, you had another rocket ride up to the beginning of 2022. You had solid 3+ quarters of downside activity. They found a bottom above, just above, the quarterly chart 20-period moving average. The trend is your friend. Who's to say they can't have a whole nother quarter of upward activity? If they do, and they get above this trend line, which from a visual perspective on the quarterly chart looks like they hit it and couldn't get through. When you go down to the monthly chart, they came close, but they never really got there. But the point is, if they start getting above this trend line, I have a number. I've done the math. I've done the work. I have a number of an upward target if they start rising once again at new highs, whether or not it's before or after another corrective move. We'll discuss that number on an as-needed basis. I have it to the penny. Just want to run through some other charts to do this exercise. We could be doing this on any vehicle whatsoever, any stock, any commodity, any Forex market. It doesn't make any difference. All charts act and react the same way. Is the 4-hour chart telling us anything different than the daily chart? No, not so much. What did they do? They came up here, they filled a gap, they're going sideways, and that's the end of it. They're above all the moving averages, they're above the trend line. No difference really from the daily chart. What about a 3-hour chart? Same routine, starting to eat time off the clock. Do you want to call this a reversal candle? Not so much. It's not really a engulfing candle with volume, any of that stuff. It's just a red candle. 2-hour chart. This could be classified as a reversal-ish candle, but all in all, well above the moving averages. They're eating time off the clock in addition to above the trend line. 1-hour chart. All of a sudden, we have a reversal-ish candle intraday today. They came down, filled the gap. We'll get to the numbers in a few moments. And they basically bounced off the gap and tried to climb a little bit back up the breakdown candle. That's what happened from a big picture perspective. We don't need to read any more into it at this point just yet. What's going on a 30-minute chart? Well, here's where things begin to change a little bit. You see something else. You have the reversal candle we saw in the hourly chart. Now you have a bearish, flaggish type of situation developing, riding, or wedgish, if you will, riding the 20-period moving average. What breaks the chain? Well, they got to make a new high here above the breakdown candle high of 518.57. It's not a new all-time high. It's just a new recent high to break this chain. What's going on a 15-minute chart? Same thing on the 30. You're making a bearish, flaggish kind of situation underneath the 20-period moving average. What breaks the chain above this breakdown candle high? See how this all unfolds? Having a light bulb type of moment. We look at all charts because we want to get the picture of what's happening on each individual chart. Gives us whether the big picture or larger time frames are confirming or are they telling us something different, and vice versa. A lot of times, exactly this are what trades are born from. Before we get into inside the numbers, I want to point something else out. How's Disney doing today? One of the more hated stocks in the market right now. We issued a short above 120, took profit halfway home, took a second profit today. This is from the Lazy Swing Trader Automagical Algo System. How did it know? How did the Automagical Algo System know to be shorting Disney near the high? And what did it do today? It covered the second portion of the trade. Any trailing position is called a risk-free, emotionless trade. Nice trade in Disney. About 120 to about 107 or more. How about this screaming sensation? This was given to the live room members in this basic area here. I talked about it for several days, even several weeks. And I said to members, the commodities, you'll wake up one day and they'll just take off and they don't look back. I had pretty solid reasons why I showed them all the charts in the live room. We talked about it, told them how I was taking the position. This was the first profit target that I suggested traders in this position take some off, let the rest go for a risk-free, emotionless trade. It's a tremendous gain either way. Wheat. Who trades wheat? I don't care, nor do I give a hoot what the name on the chart is. All charts act and react the same way. This had what we call a premium buy-in with three hands situation. Back to the spider, inside the numbers, right of the vertical is today's activity. It was a very narrow ranging day, but let's put some meat behind the potatoes. The 0 dark 30 stuff, that's early in the morning for you folks not in the know. It's turnaround Tuesday, not much doing in the overnight session. Bulls are looking for follow-through. Bears are looking to wipe the pie off their face after the recent 3-day rally. Let's start with the bull case. Above 516.60, the door opens for 518.05, which is the front end of overhead resistance. Write that down, put it on a sticky. There's 518.05. The fact was it was overhead resistance. The trouble was they hung up there all day before coming back down in the mid-afternoon session. So traders that were sticking with it got paid. Others were just lulled into a sense of, I'm giving up type of situation. It was a short trade at resistance. From a big picture perspective, we had a bear case on the table. They didn't really do much on the bear case side. Where did they get down to? They get down to a gap, and this was resistance up at 518.05 if they were able to stay above the gap. The gap becomes support when they're coming down from resistance. Pause the video, read the notes, go back to the chart, and double check the work. There's higher numbers in here, but we didn't need them today, but they were there for the taking. For any trader that was interested in a short trade this morning, we had a zone. It was an expansion above 518.05 up to 518.90, but they didn't really do that, so we don't need to go over it, but I just did. Here's where we start with the intraday stuff. We had an opening range low, 517.33. That was the current opening range low before the actual opening range clicks off at 9:30. And if they get below the opening range low, they go what? Fill the gap at 516.60, give or take. And that's what happened. They went and filled the gap at 516.60, give or take. It's not magic. It's not voodoo. Pause the video, read the notes, go back to the chart, and double check the work. It's all in here, each and every day, all the numbers you need, the schematic. Here's what if happens. Here's what happens if it's wrong, where they're going, on the upside, on the downside. Here are the targets when you're in a trade. All that stuff is inside the numbers. If you're trading in the market, in the S&P, during the trading day, whatever vehicle it is, options, futures, exchange-traded products, it doesn't make any difference. This will help you. I can't say it any more clear than that. Stocks on the move today. We had 3 on the board. 2 actually hit their entry objectives. TDC and PLTR. Entry hit over here is not registering. Something might have happened after the close to deregister that. But TDC and PLTR hit their entry objectives. Datadog did not, or I should say Datadog did not, so it's off the board. It's a no trade. Let's take a look at TDC, Teradata, getting a buzz cut at the opening bell. You see the first number was 32.70, but it was off the board. Why? Because the opening print was 32.07, which makes this number disappear because it never happened. Once they open below a number, we just look to the next number. That number becomes non-relevant or off the board. So what happened? Went to the second number, 31.68, spiked it by a couple of pennies, had a rocket ride back in the other direction. Nice trade, participation in the live room, participation inside the numbers, participation. How about Palantir? This one was interesting. We talked about it in real time in the live room. When they started doing this, when they came close to this number, 2186, this is, by the way, haircut / buzz cut at the open, came close and bounced away. What I told traders in the live room was, technically speaking, they bounced, they did the deal by coming close and painting by the numbers. That changes the trade. It doesn't change the number. It changes the trade. It doesn't have the same luster as if they came into it in, for example, this first candle. So what I told traders was, let them go lower, let them spike it. So what happened? They went to the second number. Then they gave you the minimum required base hit before coming down. So Palantir worked from a painting by the numbers, second number perspective. By the way, did I mention the numbers work? What's going on in Camp IWM? Same like the spiders, coming into an on-time type of situation. Got a little tail running here. Think you had something similar in the spiders. It's very small, narrow-ranging day, so they don't have the same type of luster that a big tail candle where it went up high and finished near the lows, or finished with a doji candle with a big tail. They don't have the same luster as a little tiny tail like this. But you're coming into an on-time type of situation, and what they're doing is running a test. They have yet to get above. They're running a test in the vicinity of the high of the most recent breakdown candle high in the sequence. That high is 206.97. The current high for Camp IWM is 206.15. They're testing the high of the breakdown candle. Normal garden variety market behavior. Like I said before with the spiders, the majority of time, the large majority of time, they don't waltz through these type of places. What about the folks down at the transportation department? They're finding resistance for the third day in a row over by the 200 period moving average. Get above, it opens the door for a push higher a little bit. And if they do start to push higher, where are they going? Well, what's the next breakdown candle high in the sequence? 15,686 and change, somewhere in that ballpark, also coinciding with, no accidents or coincidences, the 20 period moving average. Funny how that works. See how this all starts to come together? Basically, everything I've discussed in this video and all the other videos, in one way, shape, or form, is touched on, discussed, or is a piece of something that's taught in the course at Lazy E-Mini Trader. I give you more detail in there, but it's all one thing. It all comes from the same mold. What about the Q people? Same routine, on time type of situation coming up. Look for some kind of turn over the next couple of days. Breakdown candle high. I sound like a broken record. All charts act and react the same way. Yeah, funny how that works. XLF's a little different. We talked about this one last night. They had a pullback pattern. They went higher again. They're above all the moving averages, and we'll just call it the trend is your friend. What are they doing here? They're climbing or trying to once again climb higher up the last breakdown candle in the sequence. What's the high? 41.88. Does that mean they get to the high? No, maybe they go to 41.50, 41.60, 41.75. Somewhere in that neighborhood is where the target is on a continued rise in the XLF complex. What about Smashmouth? Down $2 today, almost 1%. It's canary-ish. How so? Well, the Philadelphia Semiconductor Index is a pretty good proxy for the tech space as a whole, so we could give that the moniker of a canary. It's canary-ish. Daily chart, look at the big picture. On-time type of situation coming up, but above all the moving averages, the trend is your friend. The trend is up. The trend is bullish. There's overhead resistance up. That has nothing to do, meaning up higher, that has nothing to do with what the trend is. Case in point, look at the weekly chart. Where's the resistance? Breakdown candle high. You're above all the moving averages. The trend is up, but there's resistance up here, and they can get rejected from a resistance area and therefore come back down toward the moving average once again. But the trend from a big picture weekly chart perspective, for example, is still up. So you have to separate these individual things. They can all work at the same time, but you have to understand the time perspective, what chart you're looking at, what time frame you're looking at. How you doing? If I told you how much I appreciate each and every one of you, without you, these videos are certainly not possible. That is true and very accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.